Good morning and a happy Monday. Wishing you a great week ahead. Welcome to today's episode of Morning Wealth. My apologies for not doing the Friday's episode. I had something at work and had to take care of that. Three things that we will talk about today. Nancy Pelosi set a 48-hour deadline, the week ahead, and dollar higher on better retail sales. Stocks started the week on a high note last Monday before recording 3 days of declines. Upbeat news about retail sales on Friday helped major benchmarks end the week in the positive territory. The S&P 500 edged up less than 0.1%. The broad index added about 0.2 for the week. Dow Jones also was higher by 0.4 and finished the week up by 0.1%. And the tech-heavy Nasdaq was also higher by 0.4% and 0.8% for the week. The New Zealand dollar rose in early trading on the back of Jacinda Ardern's emphatic victory, while the Aussie and yen were both flat. Asian stocks may struggle for direction after US shares were little changed on Friday. Treasuries were, the 10 years were up by about 1 basis points to 0.74. Oil also eked out a weekly gain, while gold overall retreated. In one sign of attention to any progress towards a COVID-19 vaccine, the market on Friday rewarded Pfizer after the pharmaceutical giant said it would be ready to apply for emergency use authorization of the vaccine by late November. Pfizer was up about 3.8%. Nancy Pelosi set a 48-hour deadline to agree on a stimulus package that can be passed before the November 3rd election, while noting differences remain with the White House. Are we going with it or not? And what is the language? She told ABC. The House Speaker and Steven Mnuchin talked on Saturday after weeks of ongoing discussions. Democrats are pushing for a $2.2 trillion package, while the administration is seeking one for $1.8. Mitch McConnell on the other side said the Senate will vote for a narrower $500 billion bill on Tuesday. The tricky part is that Steven Mnuchin is not even in the US. He's, I think, flying off to the Middle East. I don't know how the negotiations are going to happen. In terms of the week ahead, the final presidential debate before the US election takes place on Thursday. Trump and Joe Biden will be live from Tennessee. Earnings season will be in full flow. The week's reports start with Halliburton and IBM on Monday, then P&G and Lockheed Martin on Tuesday. Netflix, Texas Instruments and Snap are also due on Tuesday, while Abbott Labs, Baker Hughes, Biogen, Tesla, Coca-Cola and Intel are some of the big names that we are looking for on Wednesday and Thursday. It's also a big week for economic data in Asia Pacific. Bloomberg is expecting China's one-year loan prime rate to hold steady on Tuesday, though doesn't rule out the PBOC guiding it lower by the year end. China's robust recovery is accelerating. The third quarter GDP probably grew at an annualized 5.5%, which is what the consensus is showing, outpacing the previous period of about 3.2% clip. Monthly indicators from both the supply side and the demand side will likely show momentum continuing before the final quarter of the year. September's industrial production is seen rising by about 5.8%, more than August's 5.6%, while retail sales may climb to about 1.6%, up from 0.5%. In the US, we'll be looking out for data, which is your housing starts and building permits that are expected on Tuesday. On the FX front, the dollar traded higher against most of the majors on Friday thanks to better economic data. Consumer spending rose 1.9% last month, more than 2 times the market estimate. Excluding autos, demand rose by about 1.5% compared to the 0.4% forecast. Despite high unemployment and less jobless benefits, spending rose for the 5th month in a row. The clothing and accessories led the gain. Part of this increase can be attributed to delayed school reopenings. However, the data also justifies the decisions by governors to keep their economies open even as more than 20 states set records for new coronavirus infections. That's your update. Have a lovely week ahead. Stay safe and I'll speak to you tomorrow.